Have you been given a problem such as this, where you've got multiple calculations you've got to make regarding depreciation and figuring out the original cost of the equipment, and it seems like you haven't been given all the information you need and you don't know what to do to solve that? Well, you've come to the right place because I'm Professor Capko, and in this video, we're going to discuss how to find the right answers for a problem like this one. But first, I want to say I believe something wonderful is about to happen for you, so be on the lookout for it. And now back to the video. Let's take a look at what this particular problem is asking. You were given the following information about a company. The balance sheets for the company for the years ending 2023 and 2022 are showing the following. Equipment less accumulated depreciation of $212,625 at December 31st, 2023, and $151,875 at December 31st, 2022. So this is the accumulated depreciation that is shown in the accumulated depreciation account at the end of each of those years. If you're not sure what a depreciation is or how to calculate it, you may want to start with this video up here. This is for December 31st, 2023. The balance sheet for the equipment is showing a book value of $273,375, and for December 31st, 2022, it shows a book value of $334,125. That makes sense because the book value would likely be going down on the equipment as it proceeds from one year, 2022, through to the end of the next year, 2023, because of depreciation that is being expensed. Let's look at the questions. Number one, if there have not been any purchases, sales, or other transactions affecting this equipment account since the equipment was first acquired, and again, it doesn't tell us when it was acquired, what is the amount of depreciation expense for 2023? So the first thing we're going to need to figure out is how much the depreciation expense is for the year ending December 31st, 2023. Question number two is going to ask us, assuming the estimated useful life of the equipment is 8 years and there is no salvage value, determine A, what is the original cost of the equipment, B, what the depreciation method is apparently being used, C, when the equipment was acquired. And then the third question is asking us, and it's telling us to assume the equipment account represents the cost of 5 identical machines. Prepare the horizontal model and record the journal entry for the sale of the machine to calculate the gain or loss of the sale of one machine on January 2nd of 2024 for $60,000. Indicate the financial statement effect. So we've got 3 questions, one of which has 3 parts. So this really is, could be considered 6 questions overall regarding this information here, the 2 balance sheet entries that you are given. Now, it seems like you need more information, but this problem only gives you this information. So let's see how we would proceed to tackle. Let's start with the first one. If there have not been any purchases, sales, or other transactions affecting the equipment account since the equipment was first acquired, what is the amount of depreciation expense for 2023? So let's take a look at that. We're going to put the answer right here. What is the depreciation expense for 2023? Well, there's 2 ways we can look at this. One way would be to look at the accumulated depreciation account. Now, remember, accumulated depreciation is a contra asset account. You have the asset, And because it's an asset, it goes up with debits and down with credits. And if you're not familiar with that, I've got a video right here that will help you with that. And that's the asset, but as we depreciate it, we have a contra asset account called accumulated depreciation. And that one, we're going to keep adding depreciation to. We're going to keep crediting it as each year proceeds, and we're going to be expensing that amount, and that's going to reduce the amount of our assets. So we've got an asset over here that has a value, and this is going to be the original cost of the equipment. This accumulated depreciation is going to offset that cost, and the difference between the cost and the accumulated depreciation is going to be our book value. That's our book value, which we're given here, December 31st, 2023, and our book value at December 31st, 2022. So as I said, there's two different ways to find the amount of this accumulated depreciation. The first way would be to look at the accumulated depreciation account. So this account in 2023, I'm going to set it out here so we can see it a little bit. I'm just going to call it HAD, accumulated depreciation. So as of December 31st, 2023, it has a balance of $212,625. That's the balance. But the prior year, the balance was $151,875. That's the prior balance. So how much has it gone up? In other words, the expense that we're expensing for depreciation is the difference. This amount was at the end of 2022. We expense a certain amount. So this would be 2022. And then we expense this amount here, and that would be depreciation expense. We're going to expense it, and that's what we're looking for, this amount here. So that difference is how when it goes from here to here. So let's subtract it to find out the difference. So I'm going to use my handy BA2 Plus calculator. If you're wanting one of these, I've got a link in the description and a link on the screen to get yourself one. It's an excellent calculator for doing these type problems. So 212,625 is the new accumulated depreciation. I'm going to subtract from it the prior accumulated depreciation of 151,875, and that tells us the difference is 60,750. So that is our depreciation expense for 2023. 60,750. And that is just for that year, because it changed from this to this, and we were told that here. It changed from this to this. We don't know if it's going to be the same every year. If it's straight line method, this will be the same every year. If it's something like double declining balance, something along those lines, that is going to change. Now, I told you there's two different ways we can find this. The other way would be we could find the difference in the book value. The book value in 2022 was 334,125, and I could subtract out the new book value, 273,375, and see what that gives us. Because again, the book value is the difference between the cost and the accumulated depreciation. So I have 334,125, and subtract from that 273,375, and guess what? That gives me that very same amount, 60,750. So these numbers agree with each other. Either way is fine. Sometimes you might not be given this amount, the accumulated depreciation amount, and you might just have the difference in the book value. Sometimes you might only be given the difference in the accumulated depreciation. So that way you've got two different ways you can find this. So that is how you answer the first part of this problem. There are still there are still 5 more parts to complete on this problem. And I'm going to complete those just like this in great thorough steps. And I'm going to do that for my premium members. So if you want to see how this is solved and step by step and be able to ask questions about that, you're going to want to join and a gold membership. My gold members will have access to the videos showing how to complete this problem, and those will be linked for gold members. So you just look down in the description of this video. Next to the subscription button is a join button. Click on that and it'll show you exactly how to join, and you'll want to become a gold member. Those are the only people who will get to see how to complete this problem. If you like this type of material and want to learn more about it, please go ahead and subscribe to this channel and hit the notification bell so you never miss a video. Now go make it an awesome day. Thank you.